Welcome back to our series on the psychology of execution. In our previous session, we discussed why our biological wiring makes us fear buying low. Today, we are going to zoom in on a very specific, very dangerous moment in the market: the falling knife. There is an old saying on Wall Street, never catch a falling knife. The imagery is vivid and violent. It suggests that if an asset is dropping vertically, trying to buy, it is an act of stupidity that will result in injury. We are told to wait. We are told to let the dust settle. We are told to wait for a confirmed bottom. But here is the uncomfortable truth that professional investors know, but rarely say out loud. If you wait for the dust to settle, the opportunity is often gone. By the time the bottom is confirmed and safe, the price has often rallied 20 or 30% from the lows. To achieve superior returns, you must learn to catch the falling knife. And this is the crucial part, you must learn how to catch it without bleeding to death. Today we are going to deconstruct the fear of the falling knife and replace that fear with a tactical framework. Why is the falling knife so terrifying? It is because of momentum bias. When we see a price crashing day after day, our brains project that line forward into infinity. We look at a stock that was $100 is now $60, and our brain whispers, it is going to zero. We don't see the discount, we see the momentum. We feel the weight of the market selling, and we assume the sellers know something we don't. This creates paralysis. You stare at the buy button, but your finger won't move. You tell yourself, I'll buy if it drops just one more dollar. Then it drops that dollar, and you say, I'll wait for one more. Eventually, it reverses, shoots up, and you are left with nothing but regret. So, how do we overcome this paralysis? We need to change the metaphor. Stop imagining that you are trying to catch a sharp knife with your bare hands. That implies you need speed, reflexes, and luck. That is gambling. Instead, imagine you are placing a bucket on the floor. You aren't trying to grab the object. Mid-air, you are simply positioning yourself where the object is likely to land. This shifts the focus from timing to preparation. Here are the 3 psychological shifts required to execute during a vertical sell-off. Shift number 1, accept the blood. This is the hardest pill to swallow. When you buy a falling knife, you must accept in advance that you will be wrong immediately. In a crashing market, it is statistically impossible to buy the exact bottom tick. Therefore, the moment you click buy, the price will likely go lower. You will see red on your screen 5 minutes after you enter the trade. The amateur trader sees this immediate red and panics. They think, I made a mistake. The professional trader expects this. They view that initial drawdown not as a mistake, but as the cost of doing business. You must make peace with the fact that your entry will look ugly before it looks beautiful. Shift number 2, abandon the point for the zone. Fear comes from trying to be precise in a chaotic environment. You are trying to find the exact price where the selling stops. This is a fool's errand. Instead, map out a value zone. If you believe an asset is valuable between $50 and $60, any price in that range is a valid execution point. Stop looking for a specific number. When the price enters your zone, you execute. You surrender the need for perfection and replace it with the discipline of valuation. Shift number 3, the size is the strategy. Most fear of catching a falling knife comes from poor position sizing. If you have $10,000 to invest and you throw all $10,000 at a crashing stock in one trade, you are terrified. You have every right to be. You have no more ammunition. You are helpless. But if you use a tranche system buying in waves, the fear vanishes. Let's say you divide your capital into 4 parts. The market crashes. You buy your first part. The market drops another 10%. Instead of fear, you feel relief. Why? Because you still have 3 parts left to deploy at even better prices. By breaking your execution into pieces, you align your psychology with the market mechanics. If it goes up, you win because you have a position. If it goes down, you win because you can buy cheaper. This removes the binary outcome of win or lose and creates a scenario where you are comfortable with volatility. Let's conclude with this thought. The market is a mechanism that transfers wealth from the impatient to the patient and from the fearful to the prepared. The falling knife is simply the market asking you a question. Do you believe in your analysis, or do you believe in the crowd's panic? If you have done your homework and you know the value of what you are buying, do not let the red candles scare you. Put on your gloves, set your zones, accept the temporary pain for the long-term gain. Because while catching a falling knife is scary, there is another enemy waiting for you on the other side of this crash. An enemy that makes you buy high instead of low. That enemy is FOMO, the fear of missing out. And that is what we will discuss in the next chapter.